What do you think about the current situation in regards to tax reform? I would imagine you are a big proponent of a much simpler tax code. How do you advise your clients when it comes to, okay, you're helping them get the capital gains tax covered, but what about how they're receiving their income, how their income is structured? Is it, do you get into that type of stuff?
Great questions. This is like DST 2.0. And to preface this, I'm just the nurse, Seth. Who are the brain surgeons? Who are the doctors? Those are the CPAs and tax attorneys. Those are the really smart people. I'm just the nurse. I'm going to take your pulse. And I'm going to say, hey, what kind of income do you have coming in? What kind of tax deferral you're looking with? It looks like you might need surgery. You might need some specialty help here. So, but before you get surgery, make sure you vet us and you have your trusted, brain surgeons vet us as well. So get all of that on the table. But that being said, let's just say you have a $100,000 or $200,000 of income coming in from a highly appreciated business. What can the Deferred Sales Trust do? Well, you can move the funds into the trust and you can decide to have that $200,000 just compound. Meaning, Seth, you're not receiving that $200 right now, but you may be making, let's say, another $200 on the side over there. So your overall tax bracket, let's say, is $400 or $450, but now that you use the trust and you decided to let the trust compound, you're actually receiving $200 here, and this is just building up. In fact, we're doing a deal right now in Florida for these dentists and orthodontists who are doing exactly that. Okay, this is a very, very large deal, and they're defer a lot of tax, but they're still really young. They're in their early 40s, and they're saying, we don't need any income right now. Great, let's just let it compound, and if and when you want to tap into that, great. By the way, our notes go for 10 years. At the end of 10, you can renew for another 10. You can pass it on to your kids. Most of our notes earn 8. After fees, pay about 6.5%. So yeah, we can do some, we call it the tax efficiency or being tools with this. It also works for the estate tax. So for any ultra high net worth people, we can move large sums of money outside of the taxable estate in one single transaction. So if you're worth, let's say, above 22 million and you're married, or 11 million and you're single, anything above that, it's going to be hit with 40% estate tax. So yeah, we're gonna discover that. We're gonna find out what's your net worth, what's your income needs, how passive you want to be, what's your risk tolerance, and as a whole, we're going to create a plan, and we're all going to work together with your financial advisor, with the brain surgeon, CPA, tax attorneys, with me as the trustee. That's my role here, and that's it.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.